March home sales dropped to their slowest pace in more than 15 years as the housing inventory climbs 20%. Could both of these causes cause prices to drop? There it is. Let's bring in the founder of Sykes Property, Erin Sykes. Hi, Erin. Now that I can figure out how to talk and put this together. Take a look. A month ago, housing prices down 5.9%. A year ago, down 2.4%. What's happening in the housing market?
Yeah, so we've been hit with a lot of general economic headwinds. And of course, there's a little bit of fear and trepidation in the market. So typically we see about 40% of sales going to first-time home buyers. Right now, we're down to about 32% going to first-time home buyers. And, I like to look at the market in three general chunks. One is sub 1 million. Second is between 2 and 7 million. And then there's the 10 million plus. That sub $1 million price point has actually remained very strong. And this is because people aren't really, in lieu of the stock market, it's just their 401ks that have been exposed. Yes, of course, they need loans, but they've already digested that information. That $2 to $7 million price point has been the hardest hit because that's what I call a keeping up with the Joneses sector. And they're not only exposed to the stock market, but also to loan rates. So they've kind of been hit with a double whammy. And then you've got the $10 million plus buyer who loves volatility because that's when they lock in their deals.
We've had a real volatile several years in the housing market. Everything was stable largely through the Obama years, the Trump years. Then you had the pandemic. People wanted to move. Nobody was selling houses. Interest rates have more than doubled since 4 years ago. Are we now settling into a more, what you would say, an environment that we can expect for the next several years here?
Yes, I think people have gotten religion, and we're recognizing as a society that 6% interest rates are here to stay. We're not going to go back to that 3 to 4% level. Hopefully we come down a bit from the 7% that we've been seeing, but somewhere between 5.5% and 6% is where we're going to land. And then in terms of input pricing, of course, we've got headwinds with tariffs, but I've actually talked to a lot of builders, including the biggest names like Lennar, Pulte, and D.R. Horton, and they actually said that, they don't expect much of an impact from tariffs. It's more just general economic conditions that are, challenging for buyers right now. But yeah, I think just like you said, we really are recognizing that the prices are kind of here to stay. We've seen this pullback, but they're not going to go down dramatically. There's not going to be a housing crash.
What does that mean for younger home buyers? We've heard for years now that buyers under 40 are largely priced out of a lot of markets. Is that the case, and do you think that'll continue?
Yeah, well, what we've seen is we saw this rush down to areas like West Palm Beach and Miami, and frankly, those areas have become so expensive that we're seeing this exodus out of the higher price point communities and into submarkets like Mississippi and Tennessee and South Carolina, and especially those who moved out of New York City into central New Jersey, where it's still commutable to the city. And that's where we're seeing a lot of growth and opportunity for that first-time sub 40-year-old home buyer, because you can still get a piece of property, own your own four walls and a roof. You're not necessarily in a condo or a townhome, but an actual single-family home, and you can be commutable to the areas where you need to earn an income to sustain that property. And it's not so much, the glitz and glam of the big-name cities that are attracting people anymore.
And then you can spend your weekends at Home Depot. Erin Sykes, thanks so much for your analysis today. Very much appreciate it.
Of course.
Over